Would you like to know how to identify long-term investments that can multiply your capital for up to 5 times in the following years, instead of identifying short-term winners? In this video, I will explain how to identify such opportunities and indicate to you my top 3 stock picks for the future. Most investors try to identify stocks that offer a huge customer base, market share, good profit margins, and institutional sponsorship. Most likely, these stocks are already priced quite high, and therefore they will not offer a huge long-term gain for young investors. If you're a young investor and you have between $1,000 to $10,000 for example, you need to identify stocks that have a much higher growth potential. If you look at the post-crisis era, stocks such as Nvidia, AMD, Facebook, Salesforce, Adobe, Kirkland Gold, and Burlington stores have grown between 5 to 40 times within 10 years. These stocks did not necessarily offer great financial statements in the beginning, such as a good balance sheet, a good debt to asset ratio, positive profit margins, a huge excess of cash flow, or a lot of institutional sponsors. Then your question would be, why did these stocks grow that much? Well, they held another key ingredient. Stocks that hold a product or service that defines the future of our world or provides a huge revenue growth or customer base growth within the first years, they have a much higher likelihood of growing in multiple times compared to other stocks. For stocks to grow in multiple times, do not only need individual investors such as ourselves, but also institutions. Institutions invest a huge amount of capital in companies that have a big upside potential. Ideally, they would also look for positive cash flow, positive profit margins, a huge revenue growth, a big market share. But in today's world, most startup companies have a lot of costs. They invest a lot in technology, in online marketing, and therefore in the first years they have negative profit margins and they don't have any profit. However, institutions look for huge revenue growth or a good expansion towards their customers and their market share. Therefore, the analysis, as I mentioned in the Student Investor Guidebook, an online course, remains the same. And if you're looking for a straightforward, simple, and efficient way of identifying long-term investments, I would suggest you to purchase them using the link below. Now, what are my top 3 stock picks for the following years? Number 1, Tencent Music. The so-called Spotify of China was called by Jim Cramer a screaming buy if the US and China trade war is resolved. This stock presents a 300% revenue growth between 2016 and 2018. Spotify themselves are priced at $140, whereas Tencent Music is priced at only $17. Spotify's 90% of revenue amounts to their subscription services and only 10% to advertising. Tencent Music has a much better allocation of products, and therefore subscription services amount only to 30% of their revenue, and 70% of their revenue amounts for the social entertainment services. Finally, Spotify owns 9% of Tencent Music, and therefore one could only think that this investment was made for a reason. Number 2, Funko Inc. Funko is basically an online retailer focusing on trendy collectibles based on artists, movie stars, or even public figures. Therefore, this concept is always up to date and therefore has a huge growth potential. However, it also has a widespread market and therefore competitors can easily enter. However, fast-growing revenues, positive profit margins, and institutional sponsorships have forced agencies such as Zacks Investment Research, for example, to indicate that this stock is a strong buy. When stocks are given a strong buy indicator, and if it's an upgrade from a buy or a sell, for example, usually that leads to a huge upside potential in the following months or even years if the company's earnings suffice. Number 3, B2 Gold. Many of you will find that investing in a gold mining company would be a strange investment. However, with such volatile markets and also with the Bitcoin bubble behind us, many investors are turning to the old classic gold. Well-performing gold stocks can benefit from these volatile markets if they present strong financials for the following years. A good example, once again, would be Kirkland Gold, which rose by 3,000% in the last 5 years. B2 Gold is priced at around $3 with a negative profit margin in 2016 and an impressive doubling positive income by 2018. This stock might seem as a long shot, however, in my opinion, it will reach stocks such as Franco-Nevada or even Kirkland Gold in the following years. All you need to do is be patient. Now, it is your turn to identify long-term investment opportunities that offer a huge upside potential in the following years. And I would suggest you to subscribe to our channel and hit the alert icon for future video notifications and subscribe to our mailing list. Thank you.